High interest rates, high prices, decreasing inventory, plummeting demand. What has been going on in housing in September of 2022? Well, I can tell you one thing. All these factors are pressuring each other, but something's got to give. The question is, which factor will give way first and when? Hi, I'm Matt Thomas, realtor here on the beautiful Front Range of Colorado, and my team and I help people in Denver and surrounding areas buy and sell homes. So make sure you subscribe to this channel for more valuable real estate related material. Believe it or not, when you press the like button on the video, it actually helps our videos be seen by others. Ultimately, we don't want you to miss our other videos. The information about today's changing market is just too valuable, and we do cover various other real estate related topics pertaining to Denver and the surrounding areas. So back to our first question, what will give in first? Will it be home prices or interest rates? I don't think we can answer that question accurately with the evidence we have about the Denver housing market today, but we can begin to paint a picture as we follow the market for the next several months. So, contrary to what the media is saying, we are not expecting to see a crash in the typical sense of the word. Now, in the Denver housing market as of today, October 25th, 2022, it might look like from the outside that a crash is looming, and again, the media likes to tell us what to think. Perhaps some of the factors are there right now that have the makings of a crash. But there are two main factors that I'd like to discuss that are not in place for a crash right now. Now, I expect current market conditions will persist for us into winter as our fall market slows some in any given year. But the reality is the high interest rates, sellers not dropping prices, low inventory, and lower inventory on new construction, well, they're all creating resistance against each other without much give. Yes, our prices have decreased, and the time that houses have remained on the market without an accepted offer has also increased. And I'll dive into that a little bit more later. But suffice it to say that prices have not decreased as much as they really need to make homes affordable for people needing a loan. Interest rates have hit a new 20-year high. As of today, they're averaging right around 7% for a conventional loan. So of course, that lessens buyer demand. Now, the data say that the existing home sales in September were down only 3% from August, but down 23% from this time last year. Keep in mind again that last year was a record-setting year. It also is important to keep in mind that these data are about a month behind from when interest rates were still in the sixes. Data reflecting the new 20-year high on interest rates and how that is affecting demand won't show up until November. So home prices should be dropping like crazy, right? So that buyers can afford to buy homes again. Well, if you're following prices on sites like Zillow, and I know you do, even though I've given you ample reason why not to, there are homes with huge price drops, but the majority of these homes are way overpriced, so when they do sell, they sell more in line with market averages. Still lower, but closer to the averages. Now, home prices remained resilient in September considering rising interest rates and the effects inflation is having on the budgets of buyers. Although up 9% year over year, home prices have fallen 6% overall since their peak in April, as buyers take advantage of the opportunities to negotiate. Now, this September, the closing price of a home was down 2.6% of the original list price, while the number of existing homes that received contracts in September was 25% lower than last year and 17% lower than last month, indicating the coming months could bring continued softening of the market. Now, I expect that our average sales price will continue to decrease when compared month to month, but that doesn't mean that they're not still well higher than they were this time last year. The median home price in the Denver area last year at this time was $530,000. Yet in September of this year, it's $580,000. That represents a 9% increase, as I mentioned earlier. Median values were actually even up by 1% in September compared to August of this year. And that's typical as prices have historically moderated a bit in the fall after they typically slide from their peak in the spring. But we've watched that trend stay steady for well over a decade now. This April marked the high water mark for 2022, which was a bit earlier than most years. Now, as I mentioned before, however, prices have relaxed by 6% since then. Again, about 3 to 5% can be normal, so that's a little bit higher than normal. Homes are definitely staying on the market longer now than they did a year ago, changing from 5 days on the market in August of 2021 to 17 days on the market on average in 2022. It wouldn't surprise me if the average jumps closer to 30 days in the coming months, which is much more than normal the past couple years, by the way. With the understanding that the time on market is normal to expect for an appropriately priced home that's properly marketed, sellers may feel that they don't have to rush into price decreases just because they didn't get an offer right off the bat. So why aren't we seeing this crash that the media speaks of? Let's look at what some of the indicators of a crash would be. So for starters, we would see a large amount of highly motivated sellers that are financially distressed and absolutely have to move. Most sellers have a large amount of equity, and as of now, we simply haven't seen a rise in income loss. In fact, earlier this year, we saw record low foreclosures. Further, most people have 30-year-long mortgage terms, and in the past, when we experienced things like a crash, such as in 2008, we saw an abundance of variable rate mortgages rather than fixed rates, which caught up with them, forcing folks to sell. Instead, sellers may actually find themselves rate locked. For those not particularly motivated by having to sell, many sellers are able to test the market, and if they don't get what they want, they just don't sell. So until we see more highly motivated sellers who are financially distressed, we won't see a lot of foreclosures or short sales or price drops more than what a seller feels like they can bear. So what about new construction? Well, builders are dropping prices and offering incentives too. They are actually offering to buy down mortgage rates for buyers in order to protect comparable sales while helping a buyer be able to afford a home. Even though our home prices have been at an all-time high and at a 2.5% rate, most people could afford them. So oftentimes affordability has more to do with the rate than the sales price. But now that the rate is 7, that's pretty expensive to buy down to an affordable range. Before the housing crash of 2008, inventory actually peaked at about a 13-month supply, which is twice what we see in a healthy market. Current homeowners are unlikely to trade in their 3% mortgage for a new home with a 7% loan unless they absolutely have to. So existing home inventory should remain low. And buyers have scaled back on the housing starts for the past 3 months. That means we are not likely to see a huge boost in supply from new construction anytime soon. And that brings us to the second factor on why we're not seeing a big crash. And that is the number of new housing units is still lower than what is needed for the population. Yes, demand is diminished due to affordability, so builders have to respond. But unlike 2008, builders did not seriously overbuild. Now, even if a builder has, say, 10 homes to sell, and that's a problem, of course, but an interesting scenario could unfold. Nationally, construction on new housing units is down significantly. Builders are being cautious and have slowed way down on new permits and new starts. Locally, our September building permits are down 6.5% from August, but 32.5% from this time last year. Add to the fact that our inventory of existing homes is now decreasing again due to seasonality as we get closer to winter, as well as the fact that some sellers may be unmotivated to sell and face losing their historically low interest rate. And we have another super low inventory situation that's created, except this time with high rates and high prices, so demand may stay low. In the long term though, having 32.5% fewer building permits out year over year will create much less inventory in 2023 and 2024, so something's got to move the market again. So while current buyers increasingly have the upper hand from a negotiation standpoint, they also may have an increasingly hard time finding something that they want without much new inventory coming onto the market. When a new listing does hit the market, many sellers are going to insist on listing high, then eventually realize that demand has dropped off sharply. Meanwhile, many buyers will wait for prices to drop or a motivated seller to accept their lower offer. Now there's hope that as supply and demand within the housing market normalizes, interest rates can start to come back down to earth. But until then, those who cannot afford the cost of borrowed money will simply have to wait. For those waiting on the sidelines, holding out hopes that the rates may drop soon, they might have to accept the fact that the lower rate financing window that was open in 2021 and 2020 have actually closed. So what do you think? Will prices give in before rates do? If I had to guess, I don't think it's very likely that the rates will be the first to give in. Rates are expected to continue to rise at least until next year. Builders are starting to give in a little bit, offering more and more incentives, including the option to buy down interest rates with their lenders. But until there's more inventory or more financial stressors, they may be stuck in a stalemate until someone relents. So of course, I'll keep you updated as we patiently endure this standoff. Now, if you're thinking of buying or selling in the Denver or along the Front Range, my team and I are happy to help you. Please visit our website at altituderealestategroup.com and explore my YouTube channel for city tours, learn tons about the area there and on my website. And find us on Instagram and Facebook, of course. Thank you so much for watching, and I'll see you next time.